It's the Indy 500, right? I mean, it's got to be the Indy 500. I mean, they should leave it with the bricks on the, the way they had it back in the day when it was really dangerous. That's what they should change that. Make it a little more aggressive. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. Did I get you? Did I get you with that one there? Hope you're having a good day here. Welcome to our show. And we are celebrating a stock market falling, right? I get so excited when the stock market falls. This is not like fake, yeah, YouTube, hit the subscribe button guy. I just get excited. I like it. It's an opportunity. We can look around and finally find stuff to buy. So hold on tight because we got a lot going on here today. We are financial advisors here at Jazz Wealth, and we just happen to like watching the markets. We also have a research site if you want to join us there. We just did a video this morning. It posted on there, talked about scanning for pullbacks, right? So it's just a simple research site, $13 a month if you want to join us out there. You can, if not, no big deal. It's free for all clients as well. But this is our opportunity, right? This is where you start looking, build your watch list, start shopping and everything. And well, let's just talk about how the markets performed today, because on the right-hand side of your screen, you can see nasty, man. That's a nasty one. But opportunity, right? Not to mention, how is the market supposed to go higher today? There were numerous people on TV, numerous Fed comments and everything. How's it supposed to go higher when, I bet you, Cody, you didn't know this. Here we go. The top trending hashtags on Twitter were gas shortage 2021 and inflation. How about that? Gas shortage 2021. Yeah. There you go, right? So you have that, the deer are spooked, right? They're by the water. We're drinking everything, and now we're all scared because something ruffled in the water. That's the way the markets are treating. So that's what you have going on. Also, I'll take you a step further before we go in here. I got to bring the goods sometimes. Here is on Google Trends. If you search the word inflation, it's basically looking like a meme stock, straight up at the moment. This is 20-year highs, actually. And Google's estimate is that it will be over 100 for the month of May, given the search terms already that have kind of hit through there, the inflation search terms. So you've got that. And, well, today we had the official sort of real-time inflation number. CPI is what it's called. It was up 4.16% or so. There you go. We'll call it 4.2%. That's higher than the Great Recession. All right, so inflation moving higher. Also, month over month, you may be able to see it on the chart there. For the last 6 months in a row, we've actually moved higher. We could only look back to 1947, which I believe is really close to when they started tracking this. There is no other time in history where we've accelerated 6 straight months in a row there. So you got a lot of negative stuff. We all knew there was inflation out there, but that leads the markets forward to say, well, then this is just not going to be a positive day. If you look at the NASDAQ, down 2.8% on the day there. One of the worst here today. Little bounces throughout the day, but nothing really gripped. Nothing really held on there. If you're looking inside of the NASDAQ, you got Apple, right back to the 200-day there. Amazon, bigger contributors to the decline today. Amazon 2.25% lower. Microsoft continues to pull back off its highs. I would argue that's a nice looking pullback there. These were all the laggards. All three of them happen to be down over 5% in the last 1 month there. The NASDAQ, by the way, there we go. The NASDAQ is about 1% from going negative year to date. Come on over here. Come on over here, take a look at the beginning of the year. Where'd we start? Right about there. We've got right about there. We've got 1% to go before we go negative for the year. So not looking good there unless you like pullbacks. You got the Dow back to about 10% year to date there. Still doing pretty good. A couple things stick out here in the Dow. Home Depot. Great pullback on that one. Triple whammy. Lumber costs, gas worries, and inflation coming out all hurt Home Depot here today. I believe it was your biggest loser inside the Dow. Chevron. There we go. Chevron held up, one of the ones that held up the best in the Dow, up about 0.5%. You also had Merck, which has kind of been boring lately, and Verizon, your dividend stock there. These three held up the best. Only two ended the day positive. If you go over to the S&P 500, we're sitting around 8% year to date there. Only about 50 stocks or so traded higher on the day out of the S&P 500. There's actually 505 tickers, but 50 tickers only finished the day higher. Over 200 stocks lost more than 2% today. Now, if that's not a broad pullback, I don't know what to tell you there. But that's what you have going on in the S&P there. That puts about 15% of the S&P 500 into negative territory year to date, just on a quick scan that we did there. And tech happens to be the weakest sector overall. Year to date, it is only up about 1%. Same thing, just come on over here. Look at a chart, go about right there, and you see you got about 1% till you hit those lows. So tech was the weakest. If we move on over to the sector breakdown for the day, actually, tech and consumer discretionary were the two weakest sectors of the day. If we look inside of consumer discretionary, you're going to find Amazon is one of the bigger decliners there. Tesla pulling back as well, right onto the 200-day moving average. And Home Depot, which we already mentioned. Those were the weakest on the day, and only Domino's Pizza, which had a wild day today, and AutoZone, AZO, were the only ones to trade positive on the day. You look inside of tech, almost every single stock was down today. Just about 3 or 4 were positive. But every single stock in tech, besides those 3 or 4, lost more than 1%. Semis were the weakest area there. Look at things like AMAT. Beautiful pullback for AMAT if you like the semiconductors. Micron also shaping up to be a nice, pretty pullback as well. And Lam Research maybe would come in third place for the most beautiful pullback of the day. So that's what you have going on there. Energy up 0.5% today. Let's talk about this here for a second. Energy. Gas prices. That's what everybody's scared about. You want to see something here? Let's go over here. Here is the 1-week change in gas prices. It's a little blurry. We had to blow it up. It's a little bit messy. 1-week change in gas prices are hurting this southern East Coast kind of area. Not really so much in Florida. We're not noticing much in gas prices increase. Georgia up 8.7 cents. 7 cents in South Carolina. Not percentage. These are cents. North Carolina up 6 cents. Kind of puts it in perspective, right? Compared to last week when we thought there was no problem at this time, and now this week where there could be a pretty big problem, gas prices really haven't spiked that much. They've gone down in Michigan, basically all even over here. You wouldn't expect to see much given where the Colonial Pipeline is where they operate. And not a whole lot, right? So Georgia getting hit the most there. There's a lot of people going out and buying gas. I get you there, but that's kind of the bigger area there. If you look at the average cost per gallon by state, the West Coast still leads the way. We got it made over here, right? We're in Florida, $2.89, Georgia, $2.95, $2.82 in South Carolina. It really makes you look at the news and say, what are you guys doing? You trying to scare us? California's still at $4.11. I mean, that's pretty crazy right there. Oregon, $3.36, $3.52 in Washington. Those are some nasty prices over there. But basically, those that have been affected really aren't that affected. It's not really grabbed into the wallet as the media might make it seem, which just tells you it's people out there going and buying gas just in case, right? Go fill up your, what'd they say? Go fill up your trash bags full of gas, right? Who said that? Department of Energy or something like that. They said, they tweeted out, don't put gas in your plastic bags. Thank you for that. That was very necessary. We needed that. All right, going back over to the sectors here for the day. Real estate. All right, big pullback in real estate, down 2.4%. It was a uniform sell-off today. It's still outperforming the S&P year to date, so not a huge deal there. American Tower, one of the bigger contributors to the decline today. Prologis, PLD is the other ticker symbol. Those were the biggest drags. PLD happens to be performing just a little bit better. Actually, Zillow came out with some numbers. I'll share these with you if I can. So Zillow came out and said, here's the best performing areas over the last 12 months. And they included it by zip code. There's like 27,000 zip codes or something crazy. So they went through and they said, all right, where's the best performing areas? Kansas City, Missouri, zip code 64132. Do you live there or do you live next door, 64130? Those are the two areas. 35% and 40% increases in real estate prices there. Not bad. Roanoke, Virginia, 24011 was another one. You got some New York areas. Morrow, Arkansas, never heard of that. Flint, Michigan making a comeback, 30% there. Columbus, Ohio was just there, 30% higher there. Kansas City again with the 64124, some of the better performing areas. So Kansas City and the Columbus area stand out as the best performing areas in terms of rising prices there. The worst performing areas. Now, I'll admit, I'd never heard of Loma, Montana, so I did a little search here before the show looking for property. I may be in the market for some land or something. You know, it was in the mountains. All right, I got the mountain bug, but never heard of it. Well, they're one of the worst performing areas there, 13.25%, 59460. You got Oregon, West Virginia, Pennsylvania, and Gary, Indiana, 46406. Some of the worst performing areas there. Currently, home prices, I get this question a lot. And this is Zillow's data. This is not my data. People say, what multiple of your income should you use to buy a house? Well, currently home prices are trading at a median income of 3.13 times. 3.13 times your median income. So that's what they're trading at. Whether you think you should do that or not is up to you. The average is 3.78 times your income. If you were to take all the zip codes, just put them all together, give yourself an average there. Only 1.35% of all zip codes have a price to median income of 1 or below. So meaning if you make $50,000 a year, you can buy a house for $50,000, which that kind of makes sense there. And then on the upper end, 3.01% of all zip codes have a price to median income of 10 times or more. So again, if you make $50,000, your only option is a $500,000 house or more. That's a tough one there. Now, 66% of all zip codes have a price to median income of between 2 and 5. So if you want to know what the majority is, about 2 to 5 times your income, call it 3.13 to put you right in the middle, or basically right in the middle there. There is also I read through the whole thing. There's also a direct relation between population and prices. Less populated areas, lower prices. Higher populated areas, higher prices. Did I need to tell you that? Was that something? I mean, yeah, did you kind of get that? All right, so let's go back over here. Speaking of homes, let's go to home builders, not a sector, but we'll look at the XLB. If I can type, will it let me? There we go. XLB pulling back 2.52%. A little frustrating. I saw this one getting a lot of attention today because of the pullback, and they kept saying home builders, home builders, home builders. Well, in fact, if you look a little bit deeper or look under the hood, Restoration Hardware is actually the biggest drag, not only today, but let's see. What happens to be the best performing stock? I've got them all listed here. In the home builders, in fact, home builders have not been the biggest contributors to the gains, right? You got Williams-Sonoma, Mohawk, and Restoration Hardware. So think of the XHB as home builders and those related to home builders, right? So it's not all of that. These three were, in fact, the biggest contributors. Now, you have home builders in there, Dr. Horton, Toll Brothers, Pulte, Lennar, and all of that. But you've got Lowe's, Home Depot. Look at all the different names you have in here. Trex, a decking system, Carrier Air Condition. So you've got a lot of different names in there contributing to the gains, but it's not all home builders. So that bothers me a little bit when you look at something like the XLB or XHB and you say, I think I want to buy home builders. That's not your best option. You might be better off building your own little portfolio of home builders if you think that this pullback is something that you want to buy. All right, let's go to new highs and new lows for the day. Not a lot. Only 12 new highs on the day, no new lows. Domino's Pizza was one of them temporarily. It hit new highs on, got the, what do you call it, the Ackman bump there. He's shifted his position towards Domino's Pizza. Good luck. Hope the best for him there. So that was one of them. Tyson has been strong. It's really held up strong through a lot of down days. If you look back and you see when the markets pulled back as a whole, Tyson did not. So showing a little bit of relative strength there. I think people have found that out to be true and are continuing with that. Williams, we talked about this one the other day, breaking out. It did hit new 52-week highs, but succumbed to the market weakness here today, so not all that great. And CBOE, the exchanges, we just said the other day, financials pulling back, except the exchanges seem to be sticking out a little bit. And lastly, you got Norton LifeLock. Say the same thing I said yesterday. I wonder why these guys are doing so well. Well, actually, the hacker group, I forget the name of them, that hurt the Colonial Pipeline, they actually said they targeted 3 other companies. One of them was here in the U.S. Smaller, much smaller companies, but things like that get people to say, well, I've heard the commercials, I've seen the radio or heard the radio ads, I better get doing something about locking up my credit. You could do it for free, by the way. You don't have to pay them. Anyways, so those are the stocks that were hitting new highs today. I'll let the stream catch up here for a second, and I'll take your questions if you have any, but let's do some stocks in the news. And I'm going to start this by saying, it's still earnings season. So there's still stocks reporting earnings, and they're killing it. So earnings are really, 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 really good. 73% of all stocks beat on earnings. 59% is, in fact, the 20-year average. So we expect to be around 59%. We got 73% of stocks beating on earnings. And a lot of them by double digits, by the way. 73% beat on revenue. The 20-year average is 56%. So we did much better than expected, but the market doesn't care. It's as if it priced it in already. Anyways, let's go over here. You got Electronic Arts. So they beat on earnings by 16%. Revenue beat by 4%. They guided 10% higher. This was because of their live services and Apex Legends game. So a lot of it came from that. The stock's been sort of choppy lately, but I'll give you this. You've got somewhat equal highs. What do you have? Higher lows. So it's trying to give you that long, drawn-out uptrend there. It's trying, but we'll see what happens there. Fubo TV, admittedly, I've not given them a chance. I'm a Pluto TV guy when I do watch TV. It's internet TV. It's one of the apps on a Roku thing if you want to watch it there. Massive beat on earnings, up 10% on the day. Guides full-year revenue 13% higher, and it says that they're guiding their subscriber count to be up 10% going through the rest of the year, so a worthwhile bump there for them. All right, Intuit, they lowered their guidance going forward. They said the tax deadline being extended is going to hurt them. They lowered the guidance and all this stuff, tried to basically put a wet towel on all the action lately because this stock has done really well. Could this be going sideways now? I would be in no hurry to do anything special there with that one, if you're looking at it. Wendy's beats on earnings by 6 cents. Revenue's better than expected, raises guidance. It started higher. Everything took a hit today. What's unfortunate about this one is that's the potential for a much larger, longer-term breakout. Wasn't going to be today. Just didn't happen today. All right, also Gap, a worthwhile decline here today for Gap. They cut their dividend in half. They were paying out 24 cents. They're going to go to 12 cents so that they can buy back more shares. I know that's a controversial topic for a lot of you out there. I think as a company, it's probably the right decision for them. It will help them and help the stock price. As an individual, you go, come on, guys. Why would I stick with you then if you're going to do that sort of thing? A couple other things in the news, and I'll take your questions. The Quicken Loans changed their name to Rocket Mortgage, if you're looking at them. And Hertz. So Hertz is no longer listed. It's over the counter. HTZGOQ? Q. So look at Hertz here today. Hertz up 55%. They have one of the most complicated bankruptcy plans to come out of bankruptcy that I've ever heard in my life. But hey, they've got a deal. They're going to make it happen, and shareholders are getting like $1.15, something like that. I forget what it is. But there's all kinds of really geeky, forward-looking performance that they've put into it that I honestly can't even begin to understand. Using the Black-Scholes method on their buyout or on their bankruptcy plan, holy cow. You talk about, getting geeky. That's a level of geeky I'm just not going to get to. All right, so let's see. If you have any questions, I'll do my thing and try to answer them for you. I love it. Your thoughts on the VIX? Your interpretation of the move? You got a little spike. Yeah, a little spike in VIX is still nowhere near what we've seen in the past. I also don't think it's going to be one of those that just takes off. Remember, the ones in the past get out of control because of short covering. I don't think we're there yet. This is right now in the market. If you're using the S&P and you actually look at the number of contracts traded on the S&P, the futures, you're going to find we're not at that level where people are sort of hedging for doom and gloom. So it's just not there yet. That could change, but it's just not there yet. This is just largely perceived as an oversold or working on an oversold kind of pullback, which is why I think you don't see the VIX just making headlines and all that stuff. That could, of course, change, but as of now, look at tech stocks. They're going to be the first to lead you higher, and tech stocks have given you the best pullback out of anything. So even a small bid on those just crushes the idea of people wanting to protect using either the VIX or using the S&P futures as they are calculated. But Justin, yeah, we've got Disney earnings tomorrow. Well, you know it. You know I'm on it. Fastly going to start a position around 43. All right. So I got the same comments from the other day, right? Fresh breakdown here. You got a little bit of a bump. I don't think this is your ultimate bottom. I like that you're thinking, let me see it rally first, and I'll participate in that on the way up. That I can get on board with. I just wouldn't be firing all bullets at the same time. Remember, you got a gun. It holds 10 rounds, whatever. Maybe you shoot 2 or 3 on your first entry because this is a tough one. Yesterday gave you a little bit of confidence. You could say, all right, if we get back up here, I'm willing to go. But I don't know that I'd be too excited to get going there. Yep. I like it. You like lemonade? So lemonade, we're right there. I could technically start looking at it. I don't look at new IPOs till 200 days into it. I don't know much about this company. I know what they do. I don't know much about the financials here. To me, you would with what limited data you have, you like it in the 50s. and it looks like it's headed there. But I don't have I'm not going to pretend to know more about this than I do. And I'm really bad at IPOs, by the way, because I don't really do any research or look at them until 200 days has passed. And then I have a whole list, and as I get to the list, I start doing the research. But I have not really conquered this one yet. Love their logo. Love their colors. I'm getting marketed to like crazy because I did put it on my list, but I don't know enough. Yep. I know. I love it. Alibaba's coming out tomorrow. Actually, earnings-wise tomorrow, you've got Anthem, Alibaba, Yeti is going to come out, Children's Place, Coinbase, Dillard's, Disney, of course, and DoorDash was in there somewhere, if I remember correctly. I did. Yep, DoorDash as well. Duke's paying out 97 cents in dividends. Honeywell, 93. Smucker's, 90 cents as well, and that stock's doing well. MSCI, one of the exchanges, 78 cents there. WEC Energy, 68 cents, and so on and so on. And also, if you care, Charles River, there we go. So Charles River, if you notice the volume here today, they are taking the place of Fleur in the S&P 500. So there's a lot of changes in the S&P 500, 400, and 600. That is the most updated change. That will happen Friday. That'll take place on Friday. Yeah. Tim Tebow's back? Is that real?
Yeah.
Resident
Tight end for the Jaguars. He's changing positions.
Regular sports guy over here. He knows. Tight end for the Jaguars, huh?
Very excited.
What, has he been working out? Is this going to work or what?
He always works.
He works out. Okay. Yeah. All right. Well, hey, there you go. That's a guy you could cheer for, huh?
Very good.
Nice guy. All right. Cool. Well, thanks for that. What you see on the internet is, in fact, true this time. I got it. I love it. Nice. What news do you need to stop the downturn? I don't know that it's so much news, it's opportunity, right? Because you have already people saying that this tech decline is a viable decline. I agree. I don't know if it's right here, but I agree that the pullback is viable and in the market as well. It's what everybody's been waiting for, but I think it's the opportunity that tech presents itself. Look at some of the tech stocks that have sold off recently here. You got obviously tech as a whole, but you have opportunity now coming up in some of those weird areas like Salesforce.com, even your fintech areas. I don't know if you want to count at that, but like Visa is more of a fintech stock. Look at pullbacks in MasterCard. They're not going to weight things that much, but certainly helpful. PayPal giving you a pullback that we haven't seen since last year. So I think it's more opportunity that moves the markets where people just say, line in the sand, I'm willing to own this stock here. I had my chance last year. I couldn't get to it. Now I've got my chance, and I think that's what you're going to see. If there's some news that goes along with it, that'd be great. A little jawboning by the Fed would be cool, but I think it's that tech, the tech reversal, when it happens is what's going to do it here. Apple, yeah. Apple off the 200 could be that, yep. Jack's got 25,000 in a margin account, and you buy 15,000 in stock. Is that all cash? Half of it margin. It's going to be margin. You can't choose when to turn margin on and off. It's either all or nothing. So you would be on the hook for your not only your initial margin, which it sounds like you would have, but your maintenance margin going forward. So you can't say, only use my cash for this. No. Oh, yeah. Going to play with margin, huh? It's fine. To me, margin is not anything to be scared of as long as you know the rules, right? You don't go sit on a riding mower and just start pressing buttons if you don't know how it works, right? You can get yourself cut up. That's the Texas in me, by the way. You notice how I do that? I just think of these things, man. It just hit me. Yeah. That's the Texas in me. I'm from Texas, so I can say that. Yeah, I'm allowed to. Cool. All right, I'll wrap it up there. Hope you have a great rest of your day, and we'll be back tomorrow. Let's see. Do we get a little bit more tomorrow, or are we going to find a bottom here? But either way, celebrate with us. Pullbacks are great. We love the pullbacks. Have a great rest of your day. Thanks for subscribing, by the way. I noticed you guys out there subscribing more. We got a little boost in subscribers. That helps. I really appreciate that, and we'll keep putting out the good stuff for you. See ya.